Okay, we'll start by the time the others will join. Now, this paper is a little complicated, but you have to this is a paper which is a little complicated, as I told you. I don't want to type with the name, you can check it out. So let us read the first part of the problem. We check if everybody is come. Yeah, selection. Okay, so most of them no. Now, this is a 14-mark question. Right. Now, what are they saying? She wants. Now, these are things that resident and ROR, 61 years, engaged in manufacturing, business of manufacturing motor parts, subject to tax or. So, when you read it only, it will get registered. At least I do that under 44 AD. He provided the following information. What are the information? Let us a little bit move. We'll get the P&L completely. Yeah, how the P&L has come. What are the items? Just read it. Administrative, salary and wages. Don't look at the value. Interest on loans, depreciation, professional fees, rent rates and taxes, traveling, gross profit. I mean, trading they have not given. Profit on sale of asset of what? Just like that, it's okay, but scientific research. Now, obviously, under 35, whatever is being deducted as scientific research, when you sell, what is the norm for that? You have to know, because earlier, how much deduction you've got? How much is the deduction that you got? That you will be getting, that amount you will be getting as a deduction. Sorry, I was saying that scientific research, you would have got 100% deduction. Now, when you sell, the entire deduction will get capitalized, and over and above that, whatever you get will be taken as capital gain. That is a law. Winning from lotteries, this is not under this is under other sources. And this is net. So you have to gross it up. Gross up the income, and this can be claimed as TDS. That 30%, whatever is the amount of TDS, can be claimed under TDS. Now, mind you, this is given as gross, so stock is not given. Now, relating to these items, there are some discussions or notes that is given. So we have to read that carefully and understand what they are trying to talk about. Some disallowances and things like that will come. Let us read that. Now, opening stock and closing stock of were undervalued by 10%. Opening stock 4,50,000. So this is the, now again confusion. This is the original value or not? I presume this should be the value that has been taken, was shown. It's clear what's shown. Therefore, this is only 90%. Therefore, you have to hike it up to 100%. Same here. So whatever is the value, you need to hike it up. You need to hike it up. So that is what you need to understand here, that opening and closing stock were undervalued, and this value is what is taken in the books of accounts. So that value needs to be hiked up. Then only you will get the correct value. Let us see what are the other adjustments. These are not complicated, but you have to sit there and do it is what the trouble is within the time. Now let us understand the other, salary and wages, because if you look at salary and wages is one item in that. Salary and wages includes the following: contributed 20% of basic salary to NPS referred under 80 CCD regarding salary paid to an employee, Mr. Ganesh. How much salary is being paid to them? 3 lakh, and DNS allowance 40% of basic. So 40% of this is coming to 1,20,000, I believe. So that amount is total salary. This is basic salary. DA is 30 into 4, 1,20,000. So 4,20,000 will be salary plus basic plus DA. But out of that, 50% is only forming part of salary. So 50% means 3 lakh 60, 3 lakh plus 60,000 only will be the salary for certain calculations. Because you remember that gestational duplicitous case, there is only not the full amount is to be taken for the purpose of certain calculations. So 20% is being contributed. Who is contributing? The employer is contributing. Now that also you have to be clear whether he will be eligible. Obviously, that person may also contribute similar amount. Apart from that, another problem in salary and wages is some of the employees who opted for retirement under voluntary scheme were paid 2,40,000 on January 1st. Now again, what is the problem? VRS, when it's paid, it's not available in the full amount is not available in that year, but in 5 years. So in this year, only 1/5 will be available. Only 1/5 will be available. What else? Interest. Now, next one more heading is there in that thing, interest on loan. Now, interest on loan includes interest paid at the rate of 15% on loan of 12 lakhs taken from State Bank of India on what? 1/5, that is 11 months. For purchase of electric car for 15 lakhs. The car is used for personal purpose, mind you. So definitely that interest, entire amount of how much is interest? 12 lakhs into 11 by 12 into, sorry, not like this. It's not that way to write it. Into 15% into 11 by 12 only, because it's from 1/5. So whatever that interest will be disallowed, because that is not a business expenditure, because used for personal purpose. Now all these you have to take note. Next is what? Depreciation allowance as per income tax is coming to only 4,50,000. So whatever is given in the P&L, just disallow it, because they have calculated this 4,50,000 as per income tax. But they're saying, no, wait. This calculation does not include the addition which has been done. What is the addition? Motor car purchased for 3 lakhs for supply of finished goods to the dealers on 28 they have purchased. So this is more than 180 days. Therefore, full depreciation will be available at the rate of 15%. So that also has to be added to this. What about the depreciation of the car, new electric car? No, that will not be taken because that is for personal purpose. Now let us look at the last, I think, adjustment. So this much only is adjustment. Some more is there, sorry. So asset purchased was 6 lakhs on 17/11 for conducting scientific research. So what has been taken as income, profit on sale in the P&L? If you look at it, it is taken as 2 lakhs. Clear? So 2 lakhs is taken as profit on sale of that asset. Now that asset, they are saying it was purchased some years back in 2011, 19 for 6 lakhs. So in that year, 6 lakhs would have been debited to the P&L account and claimed expenses under section 35. Now what you need to do is you have made a profit of 2 lakhs, which means you have sold it for 8 lakhs. 6 lakhs will be credited to P&L account, not 2 lakhs. The 2 lakhs will be excess over the cost. 2 lakhs will be considered as capital gains, short-term capital gains. The asset was sold for 8 lakhs. See, on 5/9, it was sold for 8 lakhs. So that is what is the adjustment for this. Now, all this is over. Now, something more they are asking. The examiner probably was not, satisfied with himself. He said, no, let me make their life even more miserable. So that's why they have tried to, he's made another part of the question. See, other information. So he didn't stop there. Other information he wanted to trouble you. A plot of industrial land which was used by Sivangs for business for last 10 years was compulsorily acquired by the central government on 7/5. So during that year, it was taken. How much compensation? 12 lakhs. When was it received? Within the year. So there is no, the capital gain is arising in this year. 2021 itself is arising. Such property was purchased by him in 2005. That is 2005-6 financial year. He has purchased it for 2 lakhs. Therefore, you have to index from 2005 to the in which it sold. That is 2021. If it is the latest, you will get up to 21-22 or something like that. And this amount, this indexation has to be done to get the index cost of acquisition. From there, you have to reduce 12 lakhs. You will get the capital gain. But is there any exemption? Let us move forward. Is there any other information given? Now, you are saying no more. Wait. He has purchased another plot of land for industrial land on 21/4. That is after the year, but before the filing of the return. Before filing the return for 6 lakhs. So whatever is the capital gain, out of that, he can claim the 6 lakhs as reduction under 54B, I think. Compulsory acquisition, not B, D. Sorry, D. Under D, he can claim because industrial land taken away and he is again buying another industrial land. Therefore, he will get exemption under 54D. Further, because of the delay, the government has paid 54,000 as interest on the compensation on 28/2/2021. He has been paid that amount. When they paid this amount, they have paid also interest because there is a delay in giving the compensation. Now, this comes under other sources. Under other sources, this will be taken, only 50% will be taken, balance is exempt. Basically, 50% they are allowing on this and 50% will be chargeable to this. Indices they have given for these 2 periods. Obviously, when we do Singhania, it will be the latest. That's only two. Compute income tax liability of Shivang's for the year 21-22, and he is not opted for 100 week CA, and not it is also should be ignored. Now let us look at the solution, how it is done. Please remember the items, then we can. I am not saying you should do like this. You can do add less and do in a different way, but just try to understand the problem, the solution in this. Okay. So they are taking the profit, scientific research treated separately, taken out. Winning from glossaries taken out separately under other sources. Valuation adjustments, as I told you, that this is 90, how much is 100? That 62, closing stock, it will be added, opening stock, it will be reduced. Please go through this and understand. I'm not going to, this is more of accounting than anything else. Employer's contribution, the employer contributed is 60,000, but it is limited to, this is 20% of basic 3 lakhs. Amount allowable is, under this thing is only 36,000. How? 10% of salary and DNS allowance forming part of salary, only to that, only to the extent of what is forming part of salary, which I told you is 3 lakhs plus DA only 60,000. Though he has got 1,60,000, only 60,000 will be available because 50% is only forming part of retirement benefits. Therefore, 3,60,000 only will be considered. Right? So on 3,60,000, 10% is coming to only 36,000. Therefore, 60,000 minus 36,000, 24,000 will be disallowed. Similarly, VRS, 2,40,000 has paid. 2,40,000 divided by 5 is how much? 10%, this is 20%. That is 48,000 only will be available in the first year. So 2,40,000 minus 48, 1,92,000 will be disallowed. Alternatively, you can disallow the entire 2,40,000 here and less separately you can show 48,000. Both are right. I would suggest that way. And this is a section under which DDA. Now you understand the importance of remembering the section. If you have done it, it will help you. Interest on loan, again, it is to be disallowed here because it's for personal purpose. They have calculated how we calculate that 15% of 12 lakhs into 11 by 12. So that will be disallowed. It's not a business expenditure, but there is some advantage later on. We will see that a little later. They are disallowing the depreciation that is shown in the P&L. That is being totally disallowed. But what is allowed? that 4,50,000 that is given as calculated, but without this. This is additional motor car. Now, all this in the exam, you don't have to do like this. This you do separately add, and this you do separately and add, show it together. Here they have shown 3 lakhs into 15% because more than 180 days. All these things you can write in the exam. 45. Now, sale of scientific research. If I told you 8 lakhs has been received, but earlier, how much did he get exemption? He got 6 lakhs. That 6 lakhs will be brought back here. And the 2 lakhs will be taken as capital gain, which is what is they are showing. So this up to this is all your business income. Beyond this is the other heads. Short-term capital gain, mind you, short-term capital gain, 2 lakhs. So now we are left with some more things in this. Now, as far as the sale of industrial land is concerned, total amount received is 12 lakhs. Indexed cost is 5 lakh 42. How? 2 lakhs into that indexation. In Singhania, they would have done up to the latest. There in the text, in the question, they would have given for that period. Apart from that, he is getting an exemption under 54D, as I told you, of 6 lakhs because he has again reinvested that money in a industrial land again. Therefore, only 57,000 will be under long-term capital gain. He has earned more than 3 years. Other sources, lottery, you have to gross it up. 31,000 into 100 by 75, 30% is the tax rate. So 70% was 31,500. So how much is 100? 45,000 will be the gross amount. But what happens to that 30%? We'll claim it under TDS. Enhanced compensation is 50% of 54,000 only. As I told you, interest on enhanced compensation, 50% only will be taxable. So we have arrived at gross total income. Now look at deductions. 80 EB, see, interest on purchase of car, deductible up to 1,50,000. That amount was some 1,67,000 something, but it will be limited to 1,50,000. That is how you are getting net. Then income tax is so much, tax liability is so much. Now, from here, you can deduct TDS. They have not asked you, but you can deduct the TDS. If you want, you can write a note saying that TDS that has been paid here will be available for deduction. That completes the chapter, that particular thing. Okay. So if you look at it, if you keep practicing and you understand the provision, it is not difficult. That is what I'm trying to tell you. Please concentrate and try to, go through the provisions again and again and again so that you can recollect. Recollection is the biggest problem here. Now, before we go, the next problem is a very beautiful problem, but again, it is relating to your residential status. But before that, I just want you to just get this right. Okay. This is what we did in our notes chart number 1. Last day I was talking about. I'll just repeat it. Government will leave it. But when it comes to this, receipt from resident used for business outside India, it is not to be deemed to accrue a resident. Borrowed capital for any other purpose? Yes. For non-resident, that means receipt from non-resident. Borrowed capital used in business? Yes. Borrowed capital used outside? Any other purpose? No. Just remember. Okay. Examine the tax implication. Now, following transactions with brief reasons. Brief reasons. Government of India appointed Mr. Rahul as ambassador to Japan. He is a government servant. He's received 7,50,000 allowances of 2,40,000 during the previous year for rendering service in Japan. He's an Indian citizen having a status of non-resident status for this. Now, if you remember, 2,50,000 being allowance, I think under 10(7), it is not taxable. Whereas this is taxable, even though he's sitting outside India, he's a non-resident, but the amount is received from government. Therefore, it's deemed to accrue or arise in India. Deemed to accrue or arise in India. So 7,50,000 less standard deduction, he will be taxed in India. But 2,50,000 being allowances or perquisites, it will not be taxed by virtue of 10(7). Now, this part of the question, I think second time it has come. Juhi is a non-resident engaged in operations in which confined to purchase of goods in India for the purpose of export. She is a non-resident purchasing goods and she has earned 250,000 doing the operation from that operation. But it is used for export only. Then there is a specific exemption for non-residents that if they source the material and use the goods for only exports and earn 250,000, then it will not be taxable in India. It will not be deemed to accrue or resident. There is an exemption. We'll look at the answer. I'm just giving a brief. Naveen, non-resident in India, earned 3 lakhs as royalty patent made available to Mr. Rakesh. So he is a non-resident. He is receiving it. That is not relevant. From whom he has received is what is relevant. He is also a non-resident. Now, when you go to that chart, received from non-resident. So, this is Rakesh. I think, let me see, just I forgot the names. Naveen. Naveen has earned. So this is Naveen. This is Rakesh. Right? Now, what has been used for? It is used for, what has Rakesh used it for? Rakesh has used it for utilize the patent for development of product in India. In India, it is used. 50% of the royalty he has remitted, is received in India, 50% outside India. Now, what has been, whether it is deemed to accrue or arise in India is what we are looking at. So that we will look at. So basically, when you look at it, it is for product in India. So mind you, it is product in India. Therefore, we go back to the chart. For, see, it's used in India, but it's not for business, mind you. It is not for business. It is not for, I don't know whether it's for business. For business only, yes. Any other purpose, no. So let us look at that particular thing, what it's saying. That's a question you have to be very, very careful in understanding the question. Development of a product in India. He is developing a product, but he's not done a business for that. He's developed a product, used a payment, developing product. Now let us look at the solution. That is what they are saying. Is there any other question? Let me see. One more is there. That also we'll see and then look at the solution. James, an NRI, 10,000 he borrowed from Akash. So James NRI borrowed. So if you look at it, they received, who received the interest? Akash has received it. From whom? Akash is an also non-resident. That is not relevant. He received from James. He is a non-resident. And invested such money. Who? No, James. In shares in Indian company. Mr. Akash received investment. Has he used for business? No. Has he used for other purpose? Yes. So it's not for business. So it is not for, it's for business means then only there will be deemed to accrue. It is used for other purpose, other purposes. It is no. Why? Because of this reason. This is the reason. Did he use it for business? No. He has used it for other purposes. So let us see what the answer says. Okay. Tax inputs. This we are very simple. 10, 7. It is available. Allowances of perquisites are paid abroad, is however fully exempt. For detailed lesson is there in the hands of X, only 7,50,000 less whatever is the standard action will be available. Our allowances is exempt. That's what we have discussed. So this is okay. There's not purchase of goods also is not a problem. Export by non-resident, no income shall be deemed to accrue to India through operations which are confined to purchase of goods in India for the purpose of export. Consequently, nothing will be taxable in the hands of Mrs. Y. That is Juhi there in the question. Next is that royalty from non-resident, royalty income of non-resident taxable in India if royalty pertains to a project of the payer of royalty situated in India. In the case, royalty is payable by a non-resident for utilization of the patent for production development in India. Consequently, royalty is taxable in the hands of who is this thing? Naveen. In our problem, Naveen is giving it to Rakesh. So it is taxable in the hands of this thing because it is used in India. It is immaterial whether 50% of royalty is received in India or not. It is taxable fully. Next. Interest income of non-resident. Similar to that, received from non-resident is taxable if the borrowed money is utilized by the interest payer of the interest for business or profession in India. In the case, borrower money and interest is payable by him. The borrower is invested by B in shares of Indian company and not for the purpose of business. Therefore, the person who is receiving it is nothing is taxable in the hands of C. So therefore, if it is used for the person who is paying the interest, he has taken the money and he is using it for business purpose, then it will be deemed to accrue or rise in the hands of the person who is getting it. But here in this case, it is only for investment in Indian company. It is not business, therefore, or profession. Therefore, nothing will be taxable in the hands of C. We are, mind you, these answers we are discussing only to revisit the basic concepts of income tax and GST, not to just see, okay, this problem will come. No. Now, this is another problem which was like really, I don't know why they had to ask. So this time the examiner was a crazy fellow. That's what I can tell you, because it is something which is quite above CA Inter paper. This is a joint development agreement. Of course, it's there in the syllabus, but I don't think it is there anywhere in the material. I don't see that. Joint development, Singhania, it is there. There's a new section that was introduced. As a result, they've asked it. That's why please look at last two budgets, whatever the changes carefully. Miss Mishika entered into agreement CV Builders. On 25/2017, in which she agrees to allow such company to develop a shopping mall on the land occupied by her in New Delhi. This is the agreement. She purchased the land when 2009 for 15 lakh consideration. Now what they are doing, they are not giving her money. They are going to provide a 20% share in shopping mall to Mishika. So let us look at this. For the entire land, she is going to get 20% share in the. So what she is getting 20%, right? She retaining the 80 only she is giving to them basically, because she is getting anyway 20% share in shopping malls. Therefore, undivided share of the land she is going to retain to the extent of 20%, not this part as such, mind you. It is not part because she is occupying 20% of the shopping mall. Therefore, it is being understood that 20% will still remain. So actually, she is giving up only 80%. The certificate of completion was issued on 26/12. So that is the date on which the capital gain will arise in the hands of Mishika for giving up the 80%, because 20% is coming back to her. So for giving up 80%, it is on what is the date? Effective date is this. Now the stamp duty value of the shopping mall was 4 crore something. So for that only this 80% she has given. So 80% sale consideration will be that amount of 4,14,000. Subsequently, on 18/3/2000, she sold. So then what she did, sold 15% of this part to Ketav in consideration for 65 lakhs. Because the shopping mall share, she has got 20, she sold for 65 lakhs. So that's a separate transaction. She has also purchased. Now, what she has done, by getting the money of 65 lakhs, she has purchased on 9/5 in consideration of 46 lakhs, she purchased a house. Mind you, 1 year prior, this is a capital gain that is arising. So she can go 1 year prior, which can be claimed under 54F, because she has not sold residential accommodation. She has sold shopping mall. So 54 will not be applicable here. It will not be applicable. Only 54F will be applicable because she is buying this for and occupied for owned residence. Punjab National Bank gave her a loan of 35.50 lakhs for 80% stamp, 80% of stamp value at the time of, at the interest rate of 12% on 1/5/2020, and disbursement was 80% stamp value of what? Of this value. That is what they're saying. Huh? And disbursement was on 1/6. So she got the money only on 1/6. So interest has to be calculated on 35.5 into whatever is the rate. What is the rate? 12% up to from 1/6. That is 1/6 means 10/12. April, May is gone. She does not own. She does not own any other residential property. She does not own any other residential property on the date of sanction. Principal amount she paid 1,30,000. So for 80C she can claim. Cost of indexes they have given. Total income you have to compute. So again, I'm telling you that by letting, there are two issues there. One is she is getting a share of the 80%, as I told you. So that is a separate capital gain. This is a shopping mall. 20% because she's getting back, she's retaining the 20% of the share. 80% is what she's done, for which she's going to get capital gain of 80% of this. But what is the purchase price? 15 lakhs from 5,955 in 2009. You can index for that sale, this sale. That is first sale. Then she's selling that part, that the value that she has got, that she's selling and getting 65 lakhs. But when she sells, it's a shopping complex. That can be a building and land, both. Now, what in the problem they have not given, what is the breakup? Therefore, in Singhania, what they have done is, this is, I think they have taken 60%, this they have 40%, I think. Like that, some assume the amount and done. Now, otherwise, you will not be able to get it because building, that separation is required. Let us see how it is done. Now see, because nothing is received in cash, what is the date? On the date of, so on the date of, so here what they're saying, D owns land, 20% share, etc., etc. Okay. Now, 80% share is what she's giving, for which, what is the value? 4,14,000. For transfer of this thing, undivided share, she's getting 20%. So 4,14,000 into this thing is 82,80,000. That will be the capital gain. For that 80%, she's not getting 80. That 80 will be kept by that person. So the benefit that she's getting is only 20%. So the value of the shopping mall that she has got is only 20%, right? For which 4,14,000 is the total value. That value is 82 lakh. But she is giving up how much? 80% of the 15 lakhs. So that when you take the cost, 15 lakhs into 80% indexed to that cost, this is the cost of giving up the 80. But how much did she get? She got only 20% of 4 crore 14. The entire shopping mall is 4 crore 14, but she has got only 20%. So sale consideration will be calculated 20, and indexation of the cost, because 20% she's retaining the land. So for that, she's not giving up. That will be remaining. Therefore, only for cost purpose, for that 80% that she has given up, 15 lakhs into 80, 23 lakhs will be taken. For that, she is claiming exemption under 54F. So that is being done as 32. So she's claiming for that amount because she's got the money, taken a loan and done it. So this is for 80% of the land value. Please go through the solution again. Singhania, it's there, but I want you to go through it because they may not ask, but you cannot predict. They repeat the question, then it's going to be a problem. Now for the 15% that she's selling, what they have done, they have taken it is assumed that 40% represents transfer of undivided land for the land part, and 60%, it is assumed, mind you, it's not given in the problem, for the superstructure. Therefore, they have divided undivided land, 40% of 65, 26 lakhs. For the other part, 39 lakhs. Cost of acquisition, that cost of acquisition for, see, if you look at it, that 80, 15% of 4 lakh 14, 15% only for the building, mind you. So they have taken 4 lakh 14 and they have calculated here. For the other part, it is 15 lakhs because land she is still holding, no? Because here only 80% is gone. 20 she still has got. Out of that, she is letting go 15%. Therefore, 15 into this, 4 lakh 45 is the undivided share of land which she's doing. That's why I'm saying, trying to tell you, this is the way it is. This is 80%. This is 20. She's retaining because she's holding that particular value of 20%. She has been allotted the shopping complex. So when they are calculating this, when she's selling that 15%, it is being calculated like this. 40% for building. She's getting how much? 65. So 65 taken, 40% as undivided land, superstructure 60%. Now, this superstructure, total value for that is how much? Total value for that is how much? 4 lakh 15. So 15% is how much? 62 lakhs. Index cost, her purchase cost for the land is 15 lakhs, original purchase. Now 80 only she has calculated. So she got 20 still. So out of that 15 she is selling now. Indexation is 4 lakh 45. Therefore, long-term, short-term, this is a short-term loss. This is long-term gain. Can you adjust? Yes, you can adjust. So let us look at the last part. What is the computation? Now see. Income from house property, gross and value nil. Borrowed capital 3 lakh 55, but limited to, how did 3 lakh 55? 35 lakh 50 into, I think, 12% into 10 by 12. That's how they calculated. Okay. Then long-term capital gain, which they have calculated, is 26 lakh 20. In 15% is here, and superstructure loss. So all put together, long-term capital gain consisting is so much. ATC, nothing deduction, because you cannot claim deduction here. Therefore, total amount is, net income is so much. Okay. So we just come back again. We just finished. Please go through this problem properly. If you still have doubts, please ask me. But you have to go through it because it's not easy to explain like that. But please go through it and try to find your own logic to retain the thing. Okay. So we'll come back after 10 minutes. Just take a break and then we will come back. It's almost over. But this problem, be careful, because if they repeat, then you have to be careful. You cannot do it there unless you have done it once. The segregation, you have to be careful. They have, here in that case, they have assumed that division for